Bring in Peter Andersen, Chief Investment Officer with Andersen Capital Management. Peter, Happy New Year. Welcome. Great to kick off the new year with you. You held on to tech. You said no recession last year. You were right. You were right on technology. What do you say for this year? Recession or not? Hold tech or not?
I don't think there's going to be a recession this year. I also don't think that the Fed is going to cut rates. I must be on a different planet, Tyler, because I just cannot rationalize the thoughts of why we would have a rate cut as opposed to actually even several rate cuts. And I do think tech, some of the themes that you were talking about earlier, let me just add on to that. I think one of the more alarming themes is when AI gets introduced to hackers, that will probably accelerate their capabilities of hacking and will cause far more necessary diligence on protecting data. So data security companies, I think, are going to do well again this year.
So that would be a Palo Alto Networks. It could be a CyberArk Software. It could be others in that neighborhood. Are you implying a little bit, Peter, that some of the bloom is going to come off of the AI rose, to use the cliche, because of the reasons you cite, the ability of bad actors to use it for bad purposes?
It's an interesting approach you're using, Tyler. I would agree with half of that, meaning that I do think some of the bloom will come off the AI rose, but not for the reasons you stated. Instead, I think what could happen is people will have to refine their expectations of what artificial intelligence can do. So far, we have been drunken sailors thinking that this is going to solve every problem in humanity. But when you do a deeper dive and you look at the actual academic research, they disagree with us. They think that we are far, far from emulating human thought. And until we emulate human thought, we are confusing artificial intelligence with just advanced data production. So to summarize that, I do think that the AI, we need to refine our expectations. AI is not anywhere where we think it is, ironically, and that there's a lot more work and research to be done before we actually have to be afraid that AI is going to take our jobs, for instance.
Well, you're sticking with NVIDIA, Peter. You're sticking with the market, and you stuck with it last year in spite of all the negativity out there. And you're sticking with it even though you're not even sure we're going to get a lot of Fed rate cuts this year.
That's right. And I don't think that we will be dependent. The performance of these stocks, I don't think will be dependent upon rate cuts. And Kelly, you know, if we look beyond, say, 20 years, which for some of us, I guess, is a lifetime, but when you look past that 20-year horizon, rates were much higher than the prevailing rates now. So the question comes, you know, how long is a cycle? What is a normal rate environment? And I guess I tend to disagree with the general narrative that rates are unnaturally high right now. If anything, I think they're approaching a vertex where we would think that rates are normalized and that the Fed will not have to cut rates this year and perhaps even into the next year.